Good afternoon, everybody. It's been a little while since I've actually hosted one of these webinars myself, so good to see everybody again. Good to talk to you. Thanks for taking some time out, and I think today will definitely be worth your time. Logistically, I'll just send out, give you guys a few reminders. Same way as always, everybody's lines are on mute. That gives us clear audio, both for our time today. And then we also are recording this session to have it to reference back to in the future. If you do have a question, just because we have you on mute, doesn't mean that we don't want to hear your question. So any questions that you have can be put in the question box on the right-hand side. I will monitor that throughout the webinar, just like I always do. And either we'll answer those as they come up, or if we don't get to them as they come up, we'll certainly answer them before the end of the webinar today. If there's anything that should be taken offline, we'll certainly follow up with you at that time. Today, we're talking with Abacus Life. Stuart Little and Ryan Ambrose are new partners from Abacus, and we've kind of developed a partnership with them throughout the course of the beginning of this year, like where things are headed. I will tell you, if some of you on the call today probably have called and asked us if we're in the life settlement space or if we have a solution for that in the past. And our answer to that traditionally has been no, not really. And I think, maybe there's multiple reasons for that, but the primary reason is just not having the right partner up until this point. And I think we feel really good for going forward working with Abacus Life, and I think you'll see why over the course of the next 25 to 30 minutes as they go into more detail about their offering and how they work. As far as internal contacts here at Financial Brokerage, just to kind of fast forward to the end of the webinar a little bit, if you have a case in mind, if you have additional questions, if you're wondering where the starting point is, contact your life sales manager here at Financial Brokerage, and we can foster the communication between you and Abacus and let you take it from there. So that's either myself, Brian Leising, or Dave Stork will be your primary points of contact. If you don't know who to ask for, certainly just call the main line and ask to speak to somebody in life marketing. We'll get you in the right place. The other thing that I'll kind of mention up front is, we wanted to get this information out to you guys, and we are getting it out to you a little bit before we've made everything relevant or apparent on our end. And one of those things is the website. We've got some additional tools and resources that we'll be making available on financial-brokerage.com that are not out there today. Stuart will probably still reference those, but just know that those are coming, and we'll certainly make everybody aware they're out there and available for use. So with that being said, I'm going to turn it over to Stuart from Abacus, and he's got some relevant information to share with you.
Yeah, thanks, Tim. Appreciate the opportunity to speak with everyone. I'm going to go ahead and share my screen here. You should all be able to see the life settlement option. PowerPoint here, let me know if not, but really, again, appreciate the opportunity, gotcha. Tim, and there's a lot of amazing ways to look at life insurance. I'm sure you guys all know that. And so the purpose of this webinar is to hopefully help identify different opportunities with existing policies. We're always geared towards the next sale. We're always geared towards how do we drive more revenue from the clients, but in reality, they might have an asset that they've built equity in over their lifetime of paying premiums that could actually be worth significantly more than the surrender value and could hopefully earn you some lucrative commission structures as well. So I have just a quick agenda. The webinar in total generally lasts roughly 20 minutes. I try to make it nice and short. But if you do have questions, obviously we'll answer those at the end. We'll start with the industry background, who Abacus is. I'll provide a capital market update and how the market's compressing from a capital and investing standpoint. You'll know who the target audience is and the different client situations to go along with that to help identify these potential opportunities on the life settlement space. I'll go through our process, and we provide a complete soup to nuts, white glove service process for you. And then last but not least, I do want to share some success stories and case studies that hopefully you guys can all take with you as you look to identify some potential life settlement opportunities. So just for those who don't know, I always like to go through just the simple definitions of what a life settlement is and a viatical. It's very much the same in themselves, just a few small little nuances for either one. But ultimately, a life settlement is the sale of an existing insurance policy from a client, from an individual to an institutional third-party investor. This can either be for a cash payment or a portion of the death benefit, but ultimately it alleviates them of their premium responsibility, and it gives them more than what they would have received out of their cash surrender value. The purchaser takes over ownership, and the investor group assumes all future premium payments. The policy does stay in force, and then that investor group earns that death benefit when the insured would pass away. The viatical piece is just a small little nuance. It's just if an insured has a 24-month life expectancy or less. But the importance to that aspect is it's similar to a living death benefit. It's traditionally tax-free and hopefully can alleviate some of those stresses for someone that has a terminal illness. So first and foremost, why would someone consider looking to sell an insurance policy that they've paid so much into, that they took out for reasons obviously to last as long as they were living? Well, we think there's a numerous amount, an infinite amount of reasons why someone would need additional cash and liquidity options. But some of the situations that we see are, first and foremost, they no longer need or want the policy. If they're looking to lapse it altogether, if they're tired of paying premiums, their kids have grown, they no longer need this permanent coverage. This is usually a better alternative than lapsing it back to the insurance carrier. Sometimes we run into situations where the premium finance loan is underwater and they own significant amount back to the bank. Premiums affordability, whether they haven't paid the illustrated amount over the life of the policy, whether the account value hasn't earned enough to achieve those recommended illustrated premiums, whatever it may be, we oftentimes see that situations are really just a part of this because the clients can no longer pay the premiums. Whether they have long-term care bills, medical bills, or even from a corporate standpoint, maybe they sold their business, the owner retires, they no longer need that key man policy. Really, anyone that owns an insurance policy has the opportunity to sell it, and then really anyone that needs liquidity in the moment also has would benefit from looking into this as an option. So really more importantly though is why as an agent should you look into this as an option for your clients? Well, we believe that we want this to be a from start to finish lifelong relationship that you have with your insureds. And so not only being a part of the original sale, but also the potential sale back to an investor group. It's an additional offering for your client, so you can take advantage of both situations. The second piece is creates liquidity, hopefully to maybe sell them additional products. There is an incredibly lucrative commission structure if you're representing the client on a deal. I'll talk to you a little bit more about that, but that is a very strong incentive. But last but not least, we have clients that are extremely interested in this. My team, we don't do really any outbound marketing besides this, and we get hundreds of phone calls a quarter from insureds looking at selling their insurance policy. They want to know if this insurance has any sort of value beyond what they've paid into it. And if from a client's point of view, it's almost as if they found money that they never had access to. It's almost as if they went out into their backyard and dug a hole and they found a treasure chest that had been buried there 15 years earlier. I mean, that's kind of the mindset that individuals have when they look at this as an option. And so we want that to be an incentive, hopefully for you all, to consider this as helping them transact life settlements moving forward. So I always love to start with a case study. This is probably my most successful opportunity that I found, and the sole purpose is the insured himself was going to lapse this term policy. His name was George. He was 65 years old. It was a $7 million term with AXA Equitable. We were able to, instead of allowing him just to surrender it back for cents on the dollar and unused premium, we actually looked at potentially selling what that conversion would offer if they converted it. Well, we underwrote the case. From my point of view, that just means we looked at medical records and got life expectancy reports. The client was uninsurable. He had several impairments that created this additional value, and I'll touch on that in a second. But ultimately, after going through this process with us, the value of this insurance policy was over $700,000. This was an insured that was just excited about getting unused premium backs on his term policy, when in reality, he was sitting on an asset that was $700,000. The agent took $50,000 off the top. The client took $650,000, walked away scotch-free from the policy. What's another great opportunity to mention is that the agent was the writing agent on the conversion, so he earned an additional $220,000 on this conversion. Totaling almost 300 grand in commission. And that's part of the reason why, if there's such an incentive, there's so much incentive to offering this to your clients. But on top of the fact that he received, again, a significant amount as opposed to not. The total time to complete this was roughly 2 months. George actually used these proceeds to pay off a personal loan, which removed a major financial stress in his retirement years. Something that you wouldn't have been able to do with really any other asset that he would have owned. And that's why we tell this story. And that's why hopefully you guys will be able to walk away with just a little bit more information on how life insurance is viewed, not only from the initial sale, but even through the ownership of the policy, and then maybe even potentially selling it back. So a little bit about Abacus Life and my firm here is we've been purchasing policies for roughly 20 years. We are a provider in this industry. We pay out. You're working directly with the fund. We're backed by a top 3 global equity fund in the world. That's who we source our policies for. We have roughly 55 employees that handle the transaction as a whole. My goal is to offer complete back office support similar to a carrier relationship. Last year in 2021, we paid over $200 million to clients and to agents in commission. I mean, really just a phenomenal opportunity to add value to your clients. And to protect everyone, we offer a $5 million E&O coverage plan that covers the transaction as a whole. Since you are the financial representative, you are then covered under that E&O plan. And we've been through extensive due diligence so that your clients have complete suitability when looking at selling their insurance policy. This is an option that is legitimate, it is safe, and we believe everyone should know the fair market value of their insurance policy. We are licensed to do business in 49 out of 50 states. The only one is Alaska. I'm sorry, but ultimately you want to know that your counterparty has the ability to purchase policies no matter where you live. On top of that, there is an agent license that needs to be requested from the insurance state department, but I have a full legal team that can help advise on how to do that. It's usually a very simple form that needs to be filled out in order for you to make commission on a transaction. We went through a complete review through McLaw, 55-page due diligence report, and then on top of that, we also offer different suitability forms on top of the transaction, so your clients know and everyone involved knows that this was the right decision for them to sell their insurance policy. We're also approved at a number of broker dealers in case we need to purchase variable products as well. Like I said before, it's so important to know who's owning these insurance policies, and we're backed by a top 3 global equity fund in the world. We're the only ones in the industry that can say that. We're very proud of that fact. And why is that important to you, and why is that important to your clients? This is a relationship that lasts a lifetime. Owning an insurance policy from an investor's point of view, you want to know that your counterparty is a trustworthy source, regardless of the situation. This incredibly safe transaction, but again, this is not just a simple one-off used car type sale. This is a relationship that lasts a lifetime, and we recommend always knowing your counterparty. Some life settlement market statistics that hopefully can incentivize you to look into this a little bit more and the opportunities that we have to grow. First and foremost, just looking at the age demographics in America, there's almost 20 million citizens in the United States that are 75 and above. And that's really our target audience. But on top of that, there's 29 million that are between 65 and 74. And that right there just shows that this is not just a one-off type of industry. This industry is poised to be around for a long time because citizens are obviously living longer and longer. Their premiums are no longer supporting that life expectancy, and they're going to need options. Over the last 5 years, We've grown at a rate of roughly 30% year over year. In 2020 and 2021, the capital deployed was almost $1.5 billion. This is no small transaction, but I think it's really interesting, and it's a really interesting point to make, is the policies purchased in 2020, we're still waiting on the numbers from last year, but it was totaling around 4,000. Only 4,000 insurance policies were sold on the secondary market back to investor groups. And it's really strange to me as to why that occurs. But we did a lot of market research, but we believe that number should be significantly higher. Some of the reasons why we're not seeing the volume that we believe should be there in this space is, first and foremost, there's just low financial professional awareness. I mean, Tim mentioned earlier, he said, he doesn't really have an outlet for this. And so what we've done is we've created our business model to where we only want to work really with financial professionals. And our goal is to where you can look at this as a suitable financial transaction. You can trust your counterparty, and then you can make commission on top of it. This is as much of a carrier relationship as there is in the business. Other reasons as to why this industry is not where it needs to be, but where it should be, is we've hosted study groups all throughout the country, and we'll ask seniors in those study groups, what are the top 3 assets that you own? And guess how many of them actually said life insurance? It was less than 1%. Less than 1% of senior citizens think that insurance has a fair market value as an asset class. Instead, they look at it as a liability. And that's the mindset that we want to change. We believe, and this is my favorite line that I like to give, life insurance is personal property, and selling it for a fair market value is a legitimate, safe, and viable choice to create more options for the future. Insurance is not a liability that they pay the insurance carrier until they don't need it anymore and then give it back. In reality, they've built equity, and oftentimes that equity is significantly higher than what their cash value suggests. In 2020 and in 2021, we paid on average 8 times the cash surrender value to clients that were going to lapse their insurance. 8 times cash on cash return for individuals that were just going to surrender something back to the insurance carrier. And that's the message that we want you all to take away with today. There is significant opportunity out there. I'm sure that there are individuals that you've written life insurance that would benefit significantly from looking at valuing an insurance policy on the secondary market. And the statistics are staggering as to why they should at least look into this as an option. And so we made our process really, really simple on how to take advantage of the actual life settlement option. This next slide, it's going to be really confusing. Just kidding. It's actually as easy as it gets. All I need is a current illustration to age 105. I need a date of birth, and I need a brief medical history. With those 3 things, my team will evaluate the policy from the investor point of view. We medically underwrite the medical history that you provided, and then we provide legitimate estimates that you can go back with your client with and letting them know what the potential ranges would be. After that, it's a simple intake form, and my team will do the rest. But if you have a situation where a client could potentially be interested in this option, if you write down anything from today, all I need is a current illustration to 105, a date of birth, and a brief medical history, and I will be able to provide estimates within 24 to 48 hours. It's a simple model, but it's an effective model. And if you don't have an illustration or you don't know much about the client, we've implemented a tool with financial brokerage should be on their website soon, as a life settlement calculator. And it does basically the same thing that I would do, but you don't even need an illustration. All I need is just a age, gender, policy type, and death benefit, and it will supply you and calculate out the potential ranges of the policy. I mean, really great stuff to use when talking about this as an option with your clients. We want you to have all the data, and we want you to have all the numbers and the numbers behind the numbers. This is no longer a smoke and mirrors transaction. You can see that the health is the main driver of valuation, and you'll be the first to know what the potential life expectancies would be, what the premium cost over that life expectancy is. You'll be very aware on how these policies price, so that when everyone sits down at the table to sign the paperwork, no one has any additional questions. this is a successful business model. Like I said, we've grown 30% year over year, and I would love to make sure that this is the same exact transaction for you all. If you have a book of business, just turn the page here. If you have a book of business, we can also use our life settlement calculator for and price out 8,000 of those policies per minute. I just need an Excel spreadsheet with the data that I mentioned earlier, and you will have a full picture of your policy or of your book of business life settlement market value. You can determine what you'd like from there. I also have insurers letters that you can send out to those clients to tell them their policy might be worth something on the secondary market, and if they'd be interested in learning more about selling it on to an investor. That is all the tools that we offer to you all free of charge. There's no cost to any of this. But if you do have a case that is worth working further down the line, we have a very efficient purchase process, really to where you don't need to worry about anything other than just filling out the application from the client's point of view. So if they agree with our numbers, all I need is that application back. My team will then determine if we need to get medical records, if we need to get underwriting and life expectancy reports, if we need to pay for those, which again, no cost to you all. We'll provide you with our offer sheet, the valuation, and then again, the numbers behind the numbers so that your clients can sit down and have a good understanding of the value of their policy. Typically, the close time once an offer is accepted is roughly 30 to 40 days. But if I have a very motivated client, it can be significantly quicker than that. But we offer same day pricing, simplified underwriting. All of this is free for you all to take advantage of if you have a potential case. And so just to go along with that, I don't want you to spin your wheels and assume that every client that wants to lapse their policies will qualify for this. In the 2021, on average, we purchased roughly 75% of our policies were universal life products. And the reason being is we can manipulate those premiums. And what do I mean by that is we're not required to pay the illustrated amount. We can pay less, which ultimately the less I have to pay to the insurance carrier, the more I can give to the client. 20% of the policies that we purchased were term conversions to universal life products. Simply put, from an agent's point of view, it is a home run case when those hit. However, the clients are generally a little young, so we always recommend having some type of health impairments to qualify in that aspect. But another real key component is we don't buy a lot of whole life policies. And I get questions all the time as to why that is, but really the reality is of an insured that is in the age range that qualifies, typically that policy is considerably funded, 40 to 50%, and it's difficult from our point of view to have to allocate and deploy that amount of capital for an individual that's going to have not only a significant life expectancy, but also significant premiums that we can't manipulate like we could a universal life product. So we will still buy whole life policies, buying plenty of them in my day, but that is a situation that doesn't have as high a success rate as as universal life products. The client demographic that we recommend starting this conversation with, first and foremost, if an insured's in standard health, we want them to be roughly 75 and above. And the reason being is a client that is at that age range on the VBT tables that we utilize will have roughly a 14 to 15 year life expectancy. And that's essentially the maximum with the highest success rate for us to be able to purchase. Anything longer than that, the premiums either have to be incredibly cheap or we might have to figure out a way to manipulate the cash value, and it just becomes a little more convoluted. So we recommend 75 and above. If they're younger than that, that's okay. I recommend then it being someone that's uninsurable. That's a great rule of thumb to use when it comes to age ranges. And then obviously if they're terminal, it can be any age. This is something that is, again, a great option for them in this moment. If they need liquidity, they may not qualify for the accelerated death benefit, and it is still considered tax-free in that aspect. So those are the main things that hopefully you were able to walk away with is who qualifies, what type of products, and then how easy it is to access this marketplace. If you have questions, again, please put it in the chat. Tim, I'm just going to end with 2 quick case studies to showcase some of the different ways that we created value. The first one is with Sarah. She's 84. She was an 84-year-old female. She had $1 million universal life product. She had great health and 8-year life expectancy that we were able to calculate. but she could no longer really needed to pay those premiums. She no longer needed the insurance protection. This is a really interesting case. So she had actually written into the insurance carrier to lapse this product. She had written her lapse notice or her lapse letter, and the agent saw it, called me immediately and said, "I think this would be a good case. What do you think?" Because we knew she was in standard health, we were able to evaluate and offer her $150,000 for this policy. When in reality, she had just gotten $60,000 from the insurance carrier, and we did that within 24 hours. So if there are times and situations where we don't need to get medical records, and this is a great example of that and how we can move quickly. The total time to complete this was roughly 48 days. Sarah actually donated these funds to her lifelong religious organization. Kind of a neat way that she was able to use the valuation. And then the last case study I'll share with you was Robert. He was an 81-year-old male. It was an $8 million universal life product. He still needed the coverage, but couldn't afford the premiums. He had skipped a few years back. When they re-illustrated in his policy review, it turns out it was too expensive for him to be able to afford moving forward. My team, again, we got the medical records, we underwrote. We were able to he didn't necessarily want upfront cash. So because he instead wanted the coverage, we actually kept his insurance trust as a beneficiary at the carrier level for $3 million. And that's a different way that we can create value. So in this aspect, it acts as almost a paid up policy. When the insured passes away, his beneficiaries collect that straight from the insurance carrier. The agent on this case made $100,000 in commission, which we allocated from the offer. The time to complete this was a little longer. It was 70 days, but that's because there were additional trustees that needed to sign off on this transaction. It wasn't just a simple individual, but he was able to maintain his legacy through keeping his beneficiaries on as a portion of the death benefit instead of upfront cash. So just another way that we can create value for your clients in the different situations that they have. But that's all I got for you, Tim. Just thank you so much. Hopefully this was quick and easy for you all to learn something new. And if you do want to learn more, obviously Tim at Financial Brokerage is more than willing to hop on a call and work through these things. I'm also available myself, but we want you to know your outlets for this and for you guys to be comfortable with the transaction as a whole. So
yeah, great presentation, and thank you. And I hope everybody listening can kind of understand and get the feeling now. One of the main reasons that we chose to work with Abacus Life is just transparency and simplicity in the process. And I think Stuart was able to actually, go in and show you, hey, here's exactly how we look at a policy. We'll give you the calculator, and that calculator will be on our website, and you can get an idea. This is just a kind of a mathematical calculation, based on assumptions and the client's individual situation. So we did get a couple good questions. The first question was pertaining back to the first case study, and if you could maybe just go through the logistics. I think there was maybe not understanding of the term conversion aspect of that.
Sure.
And that the settlement was actually for a $7 million universal life policy, but what the client had at the time of starting the transaction was a term policy, then that they went in and converted to a universal life policy. So maybe just, if you don't mind, spend a couple of minutes going over the logistics of how that works. It doesn't have to be that study, but just in general.
Yeah, so in those types of situations with those term policies, we don't require the insured or the owner to make that conversion premium, but it's very difficult from a qualification standpoint to be able to buy term itself. It expires after a certain amount of time, and so no one's going to want to own that. So instead of just letting it go back to the insurance carrier, we look at the conversion option as potential value. So from the logistics point of view, the agent actually requested that conversion illustration, sent me that conversion. I never saw the term. I only saw the conversion illustration, and I was able to run my estimates and my valuation off of that. Once the client accepted the offer and we moved to closing, my firm then, we reimbursed him in this case, but sometimes we'll advance it depending on the insurance carrier. But ultimately, he was net zero in terms of that conversion premium that was required to be paid.
Yeah, and another thing that you mentioned that I'll just reiterate, as it relates to term conversions specifically, obviously the standard health target market is for ages 75 and above, in which you don't have term conversion options at those ages. So, when you're looking at a case that would be a term conversion and then a sale of that policy, you're looking for individuals that are in somewhat poor health at least, in that uninsurable category.
Right.
So.
Yeah.
And then there was a question around, and I can answer part of this. I think there's a question getting at, do I have to get appointed to Abacus? So maybe what's that process from a licensing appointment standpoint? And then can I send you an illustration that's not with the carrier that I represent? And I guess maybe I'll take a stab at this, and you guys tell me where I got it wrong, is the carrier for the life insurance, the existing life insurance policy, probably doesn't matter too much, and the agent does not have to be the original writing agent on the policy.
Yep.
If I'm correct.
Yep, that's right. That's right. It doesn't have to be your initial sale. If you've got a client that needs this option, you can still take advantage of this for them.
And then, so as far as getting an appointment, is there an actual appointment process with Abacus, or is it just adding the license in that particular state?
No appointment necessary from our point of view. The only thing that you need to have is that life settlement broker license, which, like I said, it's very easy. I've got every single application in my database that I can send to you and advise on how to get it. It's typically a small fee, of course, but then it goes on to your producer authority, so to speak, and that's how you can earn commission. So.
Yeah. So no appointment process with the carrier either for this. This is commission paid from Abacus,
right?
Not the insurance carrier.
That's correct. Yep.
Cool. I think we got all the questions answered. Like I'll reiterate a couple of things I said at the beginning. Look for more information on our website coming soon, resources. Abacus has been kind enough to share some marketing materials with us that can be used. We'll have, probably post this recording out there so you can go back and review some certain things. The calculator will certainly be out there. And so stay tuned for further communication. In the meantime, if you just completely blank and you think you got a potential case and you're not sure, just feel free to call me, call Brian Lysing, or call Dave Stork. We'll be happy to point you in the right direction as the initial point of contact. So with that, I'll wrap up by just thanking Stuart and Ryan for your partnership and your time today, and look forward to working with you on cases in the future.
Yep. Thanks, everyone. Appreciate your time.
Thanks, everybody.
All right.